All right, good morning. 11:57.75 here on the SPOOs. And again, we opened at 58.75, so we are down one net point here at midday, and the market's 9:10 a.m. here on the West Coast. 20-day chart here, I just want to point out real quick. Again, I've talked about this a little bit on the Twitter stream at Misstrade today, that we're just stuck in the muck. The range for the last 20 days is about 11.13 up to about 12.23, or about 110 points. Right in the middle of that range right here, essentially at 11.65. And again, the 61.8 for the latest move down from 11.98 down to 11.23 is the golden ratio is 11.6950. So we maintain that not much has changed here in the last month except for a little greater volatility, but the ping pong battle continues. As long as 1260 on a bigger scale holds, the bears are in control. Once we close over that, it becomes bullish on the charts. It's as simple as that right now. I still think we need to see a test. We've talked about this for a while. Still need to see a test and a close in that 10xx, whether it's 1099, 10,001, or 10,001. I don't know what it'll be, but we're kind of in the muck. Europe is falling apart. I saw the Greek bonds trading at 108%. So those are bankrupt. You can talk about whether or not Germany will continue to bail them out or not. Looks like they're not going to, from everything I've read and seen. But it's just we continue to be in a grind market where we're getting the shorts to cover at the end of the day because of the G7 possible intervention every night. So you have the intervention action going on. You have this forced. You saw it last night. We rallied all the way up to 11.62. Then we traded down to 11.39, 11.40, and then from there we went back to 11.67. Again, staying under that level. And every day we're kind of seeing the same type of action, this ping pong, back and forth, back and forth. And if you're swing trading, there's really not a lot of movement in this market right now. So be careful out there. Again, if you go back 3 months, you're looking at, again, that same range, 1350 to 10, we'll call it 1070 now on the ES. So a 280 point range. And again, as long as you stay below that 1260 level, nothing has really altered too much. So keep it, keep it simple out there, and continue to sell the rips. And if you want to buy the dips down to 11.15, that looks like it's continuing to be a good trade. But don't overstay your welcome here. The last 6 weeks, really going back to that August 7th range, have really been in this 11.15 to 12.25 range, and nothing is really shaking out here. We're going to break out one way or another. We're putting in a little higher high, little higher lows, excuse me, on the upside. But you also have a possible head and shoulders pattern, which I'm not a pattern trader, shaping up on the 60-minute chart that I'm looking at right here. So if we break this 11.10, we will get back down to that 1070, if not 1030, 1020. So just be careful out there. Keep it real. And again, intervention is a big piece of this market, and you got to be aware of what's going on in Europe and the contagion there that could carry over into the Americas. So that's it. We'll see you on the other side. Have a great trading day. Peace.